Getting right down to business here. We are doing it live on Mottek On Money right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang. Mottek On Money live on the air, 790 KBC. Streaming live online worldwide at kbc.com. And you're on demand. Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Well, finally, a mostly higher day for the stock market. A mixed finish today. Stocks did finish mostly higher after the release of the Consumer Price Index that came out for the month of February today, showing inflation did cool more than most analysts had expected. That was welcome news. The Dow coming in for a closing loss, though, of 82.5 points. The S&P 500 managed a closing gain of 27. And the NASDAQ surging 212 points after 2 days of heavy losses. And we did see some gains for the tech heavyweights today, including NVIDIA and Tesla. And we'll be talking more about those coming up here in just a moment with Ken Winans, as well as Daniel Ives at Wedbush. We'll be speaking with Daniel about the tech sector here later this hour as well. And, of course, tariffs, the back and forth with Canada and other countries continues. A lot of nervousness in the business world here in the Los Angeles area since we're such a large manufacturing region, in fact, the largest in the United States for that matter, as well as, of course, a big trade hub here with the ports of LA and Long Beach. We'll talk about what's happening with Mark Wilbur with BizFed. We're also watching the price of oil on the rebound today, and the price of gold continues to hover above 2,900, moving higher today. Right now at 2,943 an ounce. Silver above $33 an ounce. We did get the inflation report today showing the Consumer Price Index showed inflation rose 0.2% last month and 2.8% compared to a year ago. Stripping out food and energy prices, the so-called core Consumer Price Index also rose 0.2% for the month and was at 3.1% on a 12-month basis. We did see the tech stocks rebound today, but uncertainty continues to swirl about the president's trade policies, weighing on market sentiment again today. Officially, the president imposed a 25% tariff on all steel and aluminum imported into the U.S., while Canada said it will impose 25% tariffs on more than $20 billion worth of U.S. products. We did see the so-called fear index, the VIX index, the volatility index, which surged about 60% so far this year, ease a bit today. Joining us live now, the one and only Ken Winans, money manager and president of Winans Investments, which you can find at winansinvestments.com. Ken Winans, also a market historian, author of Investment Atlas 1, 2, and 3, is now out as well. He's also host of Winning with Winans, heard every Monday evening at 6 right here on your favorite station, 790 KABC. Ken Winans, thank you very much for taking the call live with us here this afternoon.
Well, Frank, it's nice to finally be on an update since, much has happened over the last week. And obviously with the time change, anybody in my line of work has had no trouble, at least, let's say, maybe getting up in the morning, but also with sleep. But, the good news, there's actually quite a bit of good news out there today. You talked about the situation with inflation and, several other companies in special groups. And I've been bringing this up on several of the other past shows. This is very much a stock picker's market. You can't look at industry groups. You can't just look at a broad index. You got to really dig into the weeds and look at what's going on. And, I was pleasantly surprised to find out that and I've been talking about it for quite a while, that the financials overall, now, yes, they pulled back, but I'm still looking at a lot of large financial companies. Many of them are insurance companies. They're holding up very, very strong. So there are things to buy on the dip, but as you also talked about, there's certainly a lot of damage, especially done to the tech side.
On the live with Ken Winans, and over the weekend, President Trump gave that interview with Maria Bartiromo. Okay. All right, we are back live here with Ken Winans, money manager and president of Winans Investments. And technology is great when it works, Ken. So let me ask you about what President Trump had to say over the weekend on this, when he was talking to Maria Bartiromo about, you mentioned recession cannot be ruled out. What's your reaction to that and this latest wrinkle for the economy and for the markets?
Well, here's the thing, and I just mentioned before the cutoff that there are clearly some industry groups that are saying, this is not going to affect us. But Frank, here's the thing. I've been asked a lot. As you know, I'm a financial historian. I've had a lot of people, clients, and certainly people who read my Forbes articles are asking me, this is unprecedented. No, it's not. During President Trump's first term, we had tariff situations go on. A lot of volatility, certainly back in 2017, but also historically, we've had tariff issues all through this country's history. I'm not saying it's pleasant to go through, and it can trigger a recession, but I do think at the end of the day, this is part of negotiations geopolitically. We're going to continue having this go on really for the next couple of years, and we just need to hunker down and take it. But let's also talk about another quick thing. I know there's a lot of hysterics out there about the market, but let's also be very sensible about this. We had 2 back-to-back years of the market up over 20%. The S&P 500 year-to-date is down a whopping 5%. That is hardly a wrinkle when you think about the gains that we've had. So I'm not convinced yet that this is a bear market. Clearly, we're cooling off. This is basically a calming down effect after 24 months of the market being on a tear. But at the same time, it's a good time for people to take a step back and look at their investment strategies and decide where they're going to want to go. Frank, one other quick thing that's very important, bonds. When I'm looking right now, and I'm going to throw in their preferred stocks, which are those high dividend paying stocks. When you look at those 2 areas, bond prices are actually relatively, I'm talking about corporate bonds, are relatively stable right now, and preferred stocks are actually even on the year. If I had all 3 going down very fast, I'd be a lot more worried about a recession. When I have a mixed picture on the financial landscape, it gives me a moment of pause to say, okay, let's see how this plays out.
On the Air Live with Money Manager Ken Winans, Winans Investments. WinAnsInvestments.com is the website. And also, Ken, obviously the tech names have taken a pretty severe hit here, led by NVIDIA, which got a decent rebound today of about $7 at 115 and change. Tesla, which has really had a rough ride of about 17.5 today to 248 and change. Those are the ones that are getting the most attention today on this rebound. What about these big names which led the market higher and now been leading the market lower?
Well, Frank, and I know we've talked about it on a couple of other shows. I personally am of the opinion, I've been feeling this way for really about the last 90 to 120 days. There is a shift in the market leadership. And I think that now you have to look at groups like financials. I'm shocked to say utilities. I mean, I would not believe that utilities would be a lead group in this time in the market cycle. But last time I checked, we all still need power, both natural gas and electricity. So, the part of the thing is the pullback in the NASDAQ tied to tariffs, or is it tied to valuations? I'm more of the camp that these stocks, anything with an AI theme last year, had gotten a little too far of itself. Some companies just downright were trading at the stratosphere, and now they've come down to reasonable levels based on where we are with that. And so, now people have asked me, would I step in and buy them right now? I would say wait and see if you have the earnings. I would wait till you get the next round of earnings reports. They're going to be coming out in about a month before I'd make big commitments on some of these beaten up stocks.
On there live with Ken Winans. And Ken, I know you cover commodities very closely as well. Oil has been under pressure. Looks like it rebounded a bit here today. Gold still on a tear after a one-day hiccup, about 2,943 here at last check. Silver above 33. What about the commodities here and their performance given the tariff back and forth and the recession word being bandied about now?
Well, it's interesting. We're talking about commodities because I'm also a commodity trading advisor. And, if we were talking about what many people are now calling a trade war, there's 18 physical commodities I track every day. And you would see all of those just skyrocketing and taking off and all these other things. I'm still looking at a very mixed picture when it comes to commodities, Frank. I'm looking at, cocoa's down 22% on the year. Frozen orange juice is down 45%. Cotton is down 6%. Now, I can also say coffee's up 24%, and we all know what's going on with eggs. What I'm saying is it's a mixed picture. And when you have these kind of pictures, the jury is still out on how this is going to play out. But you mentioned crude oil. Now, crude, obviously, here's another example. It is down 6% year to date. And I know that I myself right now reside in Las Vegas, and I'm seeing gas in the 3s. So again, before we go on to the hysterics of tariffs, let's see what's going to be happening as we play out the rest of this year.
Mottek On Money continues here, 790 KBC, on the air live with money manager Ken Winans, president of Winans Investments at winansinvestments.com. And Ken, let me ask you this then. A lot of nervous time in the cryptos here. We've seen that wild ride again in the last week or so, and with, of course, a record high for Bitcoin after President Trump took office. And then it looks like cryptos took a hit after that big crypto summit at the White House. So it just happened less than a week ago on Friday, and Bitcoin dipping below 80K. I know you cover the cryptos too. Give us your thoughts on this. These wild moves in crypto, mostly lower this week.
Well, and it's also there's a tectonic shift happening right now. When you look at what's happening between Bitcoin and Ethereum, now it's not a surprise that because cryptos, really going back to really their origin, have always been tracking to some degree the Nasdaq. So to have the Nasdaq getting hit and seeing crypto getting hit is not a surprise. But the real bloodbath is in Ethereum. It is down 51% on the year. It is down 18% in the last 15 months. That has had just a decimation. Where Bitcoin has obviously taken a big hit too, but still up dramatically from, it's up 89% in the last 14 months. But the big thing right now is everybody's looking at Solana, and everybody is now looking at the stable coins that we are expecting all these new coin offerings to come out the minute there is a sense that there is a standard regulatory landscape for all crypto. And I think that the fact that the Chicago Mercantile Exchange is adding Solana to their commodity futures trading contracts says volumes about the confidence that that exchange has. What's going on here? I would just say this, the old phrase caveat emptor, and anybody who's playing the crypto world, you really have to put on the commodity trading mindset as if you were trading gold futures or cocoa futures. You've got to know what you're dealing with, and you've got to use stop orders, and you've got to, be able to test your tolerances on things. But it's not something you want to buy and turn your back on, as people have learned the hard way.
Turning to good old currencies, the dollar, the euro, and so forth. In all this, the dollar has taken a hit. It's been strong, and I know you followed this very closely as well. And as a market historian, you've noticed what I have, and that is a weaker dollar is usually good for the stock market, right? Because it makes our stuff less expensive overseas. But now with tariffs in the mix, maybe that equation is changing. What do you see here with the currencies here, with the euro suddenly popping back to 109 against the pound? We're just about at 130 now, and the yen at 148. What are your views on what's happening on that side of the equation?
When we talk about swings in currencies, people have to remember that when they trade every day, just like stocks do, or certainly 5 days a week. And what I would say is this: I follow. There's an index of there's a basket of currencies that trade against the U.S. dollar called the dollar index. And as of right now, it is down about 3% from where it started the year. It's still up about 3% from 14 months ago. So yes, it seems like a big swing, Frank. But when you look at it internationally, including with the Asian currencies, it's still much better than it was. I mean, people talk about the 1970s when the dollar literally fell out of bed. We're not there yet. But, I think the number one thing everybody's got to remember, this entire year is going to be very fluid. And you're going to see things like the dollar swinging around. I think that I would just keep a very close eye on interest rates, although I do not think the Federal Reserve is going to drop rates. But a combination of what dollar valuation and interest rates relative to countries around the world, that's the thing you have to watch and gauge where you're going to be putting your money. Now, one other quick thing I think it's worth bringing up. I've had a fair number of members of the audience, and I'm not a big fan of foreign stock ETFs, but it is fair to say that there's been quite a bounce in a lot of the ETFs that trade their country funds that I would say that they've been around for over 20 years. They track well. But the one thing I would say is that I would be very careful about jumping into them right now, because just a whiff of something changing, and I think that those ETFs could absolutely get mauled. So again, you want to be careful. I would say leave some of your powder to dry right now. Wait for opportunities as they present themselves. And then one other quick thing, Frank, people should not be afraid to rebalance their portfolios. What worked last year, I don't think is going to work this year. And the game is always to try to figure out a way to make money. So again, buy and hold and turning your back on your portfolio is not a strategy. You need to get together with your advisors and figure out your next step with this new change in things in the world economy.
On there live with Ken Winans, money manager and president of Winans Investments, and also host, by the way, of Winning with Winans, heard every Monday evening at 6 p.m. right here in 790 KABC. And Ken, having been on the show with you now for a number of months and of course, on this program for years, I know you're a big space buff as well, and we have to pass along this news. It looks like it's let down instead of lift off at the Kennedy Space Center today. They're standing down from tonight's launch there of NASA's Crew 10 mission to the space station. So it looks like the astronauts that have been stranded there are going to have to hang in there a bit longer. So we're waiting some further news here about when they're going to try again, maybe tomorrow.
Knock on wood. But, Frank, we have that news. And then, of course, we have the news about that new lunar lander sending about live footage of them doing drilling bits into the soil, trying to find, and actually looking for rare earths, believe it or not, let's call it rare lunars, but they're looking for things that we might need on Earth. So, yeah, space is still going to be an amazing place for technology development. Obviously, Southern California had been just a bedrock of that for a very long time. But with SpaceX moving to Texas, we'll see what else happens there. But, Frank, that's the moral of the story of this year. There's going to be mixed news, good and bad. And a good part of this is a year for disciplined investors. You need to be disciplined in your game plan. The days of just, like I said, just buying and holding and watching everything go up, that's not going to work this year. You've got to be a thinking investor as you go through the rest of 2025.
All right, let me ask you the big question here. I know you're ready for it, and I've heard it before, but I'm going to ask it again now. Ken Winans, any specific places where you are putting money now and or taking it off the table?
I'm somebody who buys the thoroughbreds and not the old nares, and I look for the stocks that have actually been able to hold up well through this entire pullback. And I'm just going to throw this out. Two tech names that have managed some way, shape, or form. They're hanging in there. One of them is Meta, and the other one is Netflix. I would take a good hard look at those two names particularly. I would be inclined to buy those more than try to buy up on something that's just been so badly beaten up. And, it's like trying to catch a falling knife. And then I'm going to say it again and again and again. Financials. I am looking at, you name it, Progressive, Old Republic, Brown & Brown, A.J. Gallagher. Look at these insurance stocks. And then last but not least, another little piece of good news, the automotive side, AutoZone and O'Reilly, these stores, they're doing very well this year. So, again, there's kernels of good news if you're willing to do the research and find them. And then, gold, Frank, I would say anybody who doesn't have it in their portfolio, look at the GLD, the gold fund, the ETF. It is amazing how well it's doing. I do not think gold is overpriced, and I think it will continue to do well this year.
Terrific, Ken. Well, always great to have you with us here, and look forward to our next conversation on Monday evening on Winning with Winans at 6 p.m. here on 790 KABC. Ken Winans, top-ranked money manager Ken Winans, president and chief investment officer at Winans Investments, which you can find at winansinvestments.com. His latest book, Investment Atlas 3, Creating Wealth Using Historical Trends, also Forbes magazine contributor. Ken, great to have you with us here, and thank you very much for taking the call here this afternoon.
Thank you, Frank. Have a good night.
You too. Thank you very much, Ken. And back here on a rainy afternoon here in Southern California on 790 KABC. Mottek On Money continues 790 KABC. Good afternoon. Mixed finish today for the stock market, mostly higher for a change. The NASDAQ up 212 points, selling at 17,648. The S&P 500 rebounding 27 points at 5,599. The Dow down 82.5 points at 41,351. The yield of the 10-year note is back up to 4.31%. The market continues to get buffeted by the latest tariff back and forth. Today, the consumer price index came out better than expected, so that helped give the market a lift. Some of the tech names also roared back. We'll be taking a closer look at those coming up in the next half hour with Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities in downtown L.A. NVIDIA up today at nearly $7 at $115 and change. Tesla up more than $17 at $248 and change. Amazon up $230 at $198.89. Price of oil continues to be under pressure lately. It looks like it did get a bit of a boost today, though. Right now, oil is hovering just below $68 a barrel. Gold pulling back about 4 now to $2,943 an ounce. After a one-day hiccup, gold has roared back above 2,900. The VIX index, the volatility index, Wall Street's so-called fear index, pulling back today by 10% after a big pop yesterday. And cryptos, of course, very volatile and mostly lower the last several days. Bitcoin up about 500 right now, back to 83,475 after cracking below 80K this week. Ethereum, as Ken Winans mentioned, has been under pressure, up about $15 now at 1,906. And Doge at the moment at 17 cents. And now the latest news here on 790 KABC. Mottek On Money continues here, 790 KABC. Nervous time in the business world with the tariffs in focus. President Trump today officially increasing tariffs on all steel and aluminum imports to 25% today. President moving forward with the plan to widen tariffs on steel and aluminum. And it looks like global trade worries are deepening today as the European Union and Canada announced billions of dollars in retaliatory tariffs on U.S. exports after the president imposed the across-the-board levies on steel and aluminum that take effect today. All of this and concerns about the global economy, including a recession. That's a possibility. Can't be ruled out, according to the president, which rattled the markets this week. We did see a mixed finish for the major averages today, with the NASDAQ rebounding 212 points, the S&P 500 of 27, and the Dow pulling back 82.5 points. Joining us live now is Mark Wilbur, chairman of Employers Group, based here in Los Angeles, former chair and founding member of the Los Angeles Business Federation, also former associate dean of the USC Marshall School of Business. Mark Wilbur, thanks for taking the call here this afternoon.
Thanks for having me on, Frank. Great to be here.
Wonderful to have you with us. And give us the latest reaction here to this tariff back and forth. And among the movers and shakers you're talking to, what's the view of what's happening here at the moment?
Gosh, if I was to advise President Trump on anything, I just think there needs to be real crystal clear communication regarding all these tariffs, because what people don't realize, he keeps saying it. He keeps saying reciprocal tariffs. But I don't think people actually understand how much our country is tariffed by the EU, Canada, other countries, because, a lot of our products can literally not even bother to send them to Canada because, some of the dairy things are like 293% tariffs, so which makes them just basically unbuyable. So when he's talking about reciprocal tariffs, he's like trying to get to a level playing field because people are taking from us and we're not getting any benefit in this process from a level playing field. So he keeps talking about reciprocal, but I really don't think the general population understands just how much is taken from our country in tariffs globally.
And thanks for explaining that. And it should also be noted that Los Angeles is the largest manufacturing region in the United States. And, of course, one of the ideas behind what he's doing is to try to bring back more manufacturing here to this region as well as other parts of the country and make America great again and all that. But what is happening here on the manufacturing front and among the manufacturers that you're talking to with the price of goods now expected to increase? Given the tariffs, with its reliance so much on foreign imports, what's the talk among the manufacturers here now?
Well, I think in the near term, this is why he's got that date of April 2nd out there. I think in the near term, most business leaders I've talked to are hoping and hopeful, I guess I've better said, that this will get resolved before it hits April 2nd. Now, maybe it hits April 2nd and it goes a few days past. But I think most countries are going to come to the table and work this out because I think, Trump loves to negotiate. That's literally, the art of the deal, the whole nine yards. We've all heard it 1,000 times. He really likes to negotiate out where everybody wins. So I think he's in hopes that these countries, the EU, it doesn't really matter, anybody, that this is going to impact. And trust me, it's going to be a lot of countries. That they'll come forward and work things out so that we, either have rights into that country or, maybe our banking industry can go there. Most people don't realize, our banking industry barely has a footprint in Canada because they basically regulate us out. I mean, it's very, very hard to have retail banking in Canada. It's very hard to break through that. So there's a lot of wiggle room that can be negotiated for our businesses, our industries to be able to play fairly. So I think most business leaders, Frank, are hoping that this gets sorted out. You don't want this being dragged into late spring, into May, or things like that. It needs to get sorted out because it would actually wreak a lot of havoc on global economies.
Yep, the latest small business survey finds uncertainty is high and rising. So that's certainly uncertainty is a big topic of conversation at some of the recent business gatherings and conferences, and just pretty much over dinner and so forth. And now, of course, the other big story here locally that we continue to follow is the recovery here, and hope everybody stays safe in this latest rainstorm here. Now we've seen fire, now we've seen rain here in Southern California, and the potential for another disaster here as more rain is expected today and tomorrow. But on the recovery front, what's the latest you're picking up here, and how this is going?
Well, there's several bills being tossed around in Sacramento right now about what to do in the future, how to get money into the right hands, how to distribute funds to people in situations like this, including some that are looking at how to have a better response and be better prepared when we have these kind of circumstances, hopefully never again. But the reality is, Frank, there is a long road ahead, and it is not crystal clear at all. And I'm sure Rick Caruso has talked about that on your show extensively. It's going to be a real problem because the inflationary areas of construction, just material cost, everything is going to cost more to get things built. And of course, that really isn't effectively put into a lot of plans about recovery funds and how to get people back on their feet again. So it's going to be really difficult. I don't think it's going to be easy. I think there's a lot of battles ahead of us, both politically as well as just trying to deal with the battles of trying to access materials when the rest of the country is building and growing and doing its thing. The needs here for construction materials are going to be extraordinary. I mean, we're still in the cleanup process right now. We're not, exactly a ton of breaking ground right now, but, in the next year or so, it's going to be a real problem.
Mark WILBUR, the chairman of Employers Group, based here in Los Angeles, former chair and founding member of the LA Business Federation, LA BizFed, and former associate dean of the USC Marshall School of Business. Mark, thanks very much for taking the call here. We'll keep an open line to you and continue to follow all this very, very closely with you and the entire business community here in Southern California. Mark WILBUR, thank you very much for joining us live here this afternoon.
You bet, Frank. Thanks for having me on. Always a pleasure.
Stay safe out there this afternoon as we check your ride now here on 790 KABC. Mottek On Money continues here, 790 KABC. Tech bounced back today after a vicious sell-off with NVIDIA and Tesla in the spotlight. Both of those names have rebounded today. Let's bring in Daniel Ives now, who is Managing Director and Global Head of Technology Research at Wedbush Securities, part of our extended coverage of the markets this week. Daniel Ives, thank you very much for coming to the line here this afternoon.
Great to be here.
You've written extensively about this tech sell-off, and I'm sure a lot of people are asking you what should one do in this situation here, where we've seen the Mag 7 names take a tremendous hit. They led the market higher and now have been leading the market lower lately, especially NVIDIA and Tesla. Give us your view of this latest market action here.
Yeah, look, I mean, it's a white-knuckle moment because you don't know what's coming out of Trump White House on an hourly basis, right? Tariffs, a lot of worries about what's happening, especially when it comes to China and some of the recessionary fears. Tech has been sort of bullseye, right? You've seen these stocks sell off just massively. In my opinion, I believe it's a major buying opportunity. I mean, I believe we'll navigate through this because we're in the biggest tech spending environment that we've been in the last 40, 50 years. And I think tech ultimately in 2025 makes all-time highs as some of the dust clears from what we're seeing in the Beltway.
All right, so are you doing some bottom fishing here, and what are your favorites here in the tech space, the ones that have been hit hard in the last week or so?
Yeah, well, I think the name you have to own is NVIDIA. I mean, to me, we're talking about what's going to be a $4 trillion market cap and probably higher. They have the GTC conference next week, which will be at, and I see more and more in terms of AI, there's only one chip in the world fueling it, it's NVIDIA. I think Microsoft, the sell-off here, is one that makes that compelling. We talk about Apple, despite some of the AI delays. I think ultimately 25% of the consumer AI revolution goes through Apple. And then, you look at Tesla. I mean, I think Tesla, despite the Musk issues, it is way oversold. He's going to have to ultimately, to moment of truth, become more and more focused on CEO of Tesla. But I'd argue it's probably the best autonomous robotics play out there in the world over the coming years.
All right, and then some call it the Mag 8 with Palantir in the mix, right? What about Palantir here?
I mean, look, I believe Palantir is going to be $1 trillion market cap in the next 3 to 4 years. I mean, to me, Palantir is the next Oracle, the next Salesforce. And it's one, look, valuation, you could say it's expensive, but my view when it comes to AI, it's being led as much on the chip side when it comes to NVIDIA. It's being led on the software side with Palantir. I think Cart and Palantir, probably one of the best positioned out there across all of tech around the world.
All right, and obviously you're right here in Los Angeles, Wedbush headquartered right here in L.A., in the largest manufacturing region in the United States, and a big part of that is still tech, by the way. What about all this tariff back and forth, and what do you see being the ongoing impact on the markets as we go through this tariff storm here now?
Look, it's as you know, Frank, the last thing market wants is uncertainty. At least if you know what's coming, it's fine. And even for Trump, this has kind of been unprecedented. I continue to believe it's all a game of high-stakes poker. It's about getting, whether it's Canada, Mexico, China, to the negotiation table. But as we're going through this, it's agita and it's white knuckle. But the reality is that it would take decades to move maybe 10% of the supply chain to the U.S. So the reality is, like, you could talk in D.C. It's much different than the reality. I think that's something investors clearly understand.
Here's a tech name that's come up today that I don't think we've ever talked about. iRobot. Shares of iRobot tumbling big today to hit a record low. This is the company that makes the Roomba robotic vacuum cleaner, and apparently there's doubt now about its ability to stay in business. What happened here with the iRobot bursting on the scene here with this tough announcement here?
Yeah, you're going to see more bursts in the scene because, look, robotics is real. I mean, I continue to think Tesla's the best way to play robotics, but any sort of issues like they had, stocks during it crushed. I think there's other names, Serve AI and some other robotics plays that you could play, but just like we saw with the quantum stock sell-off earlier this year, right around CES with Jensen's comments, it's going to be look, you buckle the seatbelt, but the reality is, in the chaos creates the opportunities for the tech winners. And I think that's why you continue to sort of own this basket, semis, software, cybersecurity as well.
On the air live with Dan Ives at Wedbush Securities. And Dan, on the crypto front, we've seen a wild ride again this week. What are your thoughts about the latest moves here with Bitcoin dipping below 80K this week, now at around 84,000, Ethereum especially taking a big hit, and the list goes on?
It's a risk off, right? And risk off environments, you're going to see crypto, Bitcoin, Ethereum, trade like tech. But our view is that over the next, call it 1, 2, 3 years, this is going to become more and more of a mainstay, as an asset class. So I think these are ones on dips like this. We continue to view them as opportunities relative for investors that have patience and navigate this sort of very, very uncertain environment that's come from the Beltway.
Dan, thank you very much for taking the call here this afternoon, and I have a feeling we'll have many more conversations here as the tech space remains very much in focus in all this. That is Dan Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, headquartered right here in downtown Los Angeles. Dan, thank you very much for joining us live here this afternoon. Taking a look now at the latest small business confidence reading we got this week, dropping for a third straight month in the month of February, wiping away much of the gains in the aftermath of President Trump's election victory in November. The National Federation of Independent Business announcing its Small Business Optimism Index down last month, mirroring declines in both consumer and business confidence, as well as the stock market, which have all erased the so-called Trump bump recently. We did see a mixed finish today. Recapping the action here, the NASDAQ did rebound 212 points to 17,648. The S&P 500 of 27 at 5,599. And the Dow slipping 82.5 points at 41,351. The yield in the 10-year note now at 4.31%. Stay tuned now for the 790 KBC News Blitz with Randy Wang. And I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Michael Rosenbaum and his Smallville co-stars take you behind the scenes of one of the greatest shows of all time.
Talkville.
I just had a flashback.
Tom Welling's here.
We're going to do a podcast
Throughout the year, we've got a lot of season ahead of us.
It's big talk.
This is good fan stuff.
Yeah, there was some good
stuff. If you're watching the show, this is good stuff.
Yeah.
On Smallville.
Yeah. They made it like this is the first time they've seen the guy ball.
That's hard.
I thought it was pretty dark.
It's Talkville.
We're pumped.
The Smallville Rewatch Podcast.
You got to be a part of it.
Follow and listen on your favorite platform.